Okay, you guys, we're now going to look at exercise 4-15 on page 211. This will be a review for some of you from managerial, but they're just asking us, given some information, to prepare a reconciliation of net income to net cash flows from operating activities. We kind of looked at this back in chapter 2, but we were going in the other direction. They were giving us cash basis net income, which is the same thing as net cash flows from operating activities, and asking us to convert that back to net income. Well, here, this is the this reconciliation is required to be shown by generally accepted accounting principles. So when you're preparing the statement of cash flows, you either have to use the indirect method, or you can do what a lot of companies do. They present the statement of cash flows using the direct method, and then below that present this like we did in exercise 413, and then below that they show a schedule reconciling net income to net cash flow from operating activities, which we're going to do here in exercise 415. Okay, so our starting point would be net income. Let's look back at the notes that we put up in chapter. Okay, so our starting point in the net cash flows from operating activities section of the statement of cash flows, when we use the indirect method, our starting point is net income. We want to add decreases in current assets, excluding cash. We want to add increases in current liabilities, excluding dividends payable, which would be handled in the financing section. We want to add back any losses on sale of investments, any depreciation and amortization expense. Alright, we would want to deduct any increases in current assets, excluding cash, decreases in current liabilities, excluding dividends payable, and gains on sale of investments. And that's going to bring us to, this says cash basis net income, but what we're really calculating here is net cash flow from operating activities. That's two names for the same thing. In this context, we would use net cash flow from operating activities. I'm going to change this up a little bit here. Let's do that. And let's just do this. It's assumed to be accrual basis net income. Clean that up a little bit. Okay. So let's go back over here. Our starting point would be net income. And they tell us net income is $17,300. We'd first put cash flows from operating activities, and then we'd list net income, $17,300. Okay. Then we've got adjustments for non-cash effects. Well, those are going to be any depreciation expense, amortization expense. The only one I see here is depreciation expense. If we go back over here, remember it's added. So adjustments for non-cash effects would be things like depreciation expense and amortization expense. Here we got depreciation of $7,800. Then our next little category here, or subcategory, is called changes in operating assets and liabilities. You're probably more familiar with them being called changes in current assets and liabilities. Although, really want to pick up operating, I guess there could be a little difference there. Assets and liabilities, I think that's pretty much the same thing. Trying to make a difference there, but it's just some semantics. Okay, so let's go back to our chart. Let's just go down the list here. We've taken care of net income, we've taken care of depreciation expense, an increase in accounts receivable. Well, accounts receivable is a current asset. Okay, if it decreased, that means cash came in, right? But if it increased, then we made more sales on account, less sales for cash. So So an increase in accounts receivable is an increase in a current asset excluding cash. That one's going to be deducted. You can refer back to your chart here, and you have that posted in the Chapter 2 section of your Moodle site. I just changed the wording a little bit here and here. And again, that one was an increase in a current asset excluding cash, and they, of course, are deducted in this calculation. Okay, what do we got next? A decrease in inventory. Well, if inventory decreased, it means we sold it, and eventually cash is going to increase. So we're going to add that one. It's a decrease in inventory, which is a current asset. And those are added. We're going to add 5,500 over here. Decrease in inventory. A decrease in prepaid insurance. That's another decrease in a current asset. So that one's added as well. A decrease in salaries payable. Well, we only decrease salaries payable by paying our employees. That means cash going out. That's a decrease in a current liability. Anytime we decrease those, pretty much means cash went out. So that one's going to be deducted. A decrease in a current liability. You can see that back over here. A decrease in current liabilities excluding dividends payable. Those are deducted. $2,700. And an increase in interest payable. That one's a current liability as well. It increased. Current liabilities that increase, well, it's really like borrowing, so it means we have more cash on hand. We add increases in current liabilities. That's an increase in interest payable, which will be added. Now we total that entire section and get net cash flow from operating activities. $25,900. I know that was a little bit of a repeat for you guys, but I thought we should see it again here. Now, after working that one with me, I don't think you'll have any trouble with exercise 415 on your homework. Thanks.